Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Atlanta Braves stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a mid-cap company, 2.5 billion market cap. They're trading at $42 a share, and they have 60 million shares outstanding. Atlanta Braves owns and operates the Atlanta Braves Major League Baseball club. They also operate a mixed-use development, including retail, office, and hotel. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They had a small amount of free cash flow in 22 and 23, but then it became negative in 24 in the trailing 12 months. Not the trend you want to see. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's negative each year. And the negative was highest in 2024, negative 125 million. Revenue is a sales for the company, and that does go up each year from 568 million to 660 million. So their revenue is going up, but their losses are going down. That just implies expenses are growing at a faster rate than revenue is. We estimated 4 years of future free cash flows. We also estimated a terminal value to all cash flows past year 4, that's 1.7 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $1.3 billion. We divide that by 60 million shares. And we get a calculated stock price of $22. They're trading at $42, so they're trading at an 87% premium. It's a big sell according to the model. Do you think it's a buy or sell? Let me know in the comments. Unfortunately, simply Wall Street does not value this stock. Also, there's no analyst that priced this stock. I guess nobody cares about this company. There are 42 companies in the same industry as Atlanta Braves, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend about $100 million in CapEx. These are the investments in property, plant, and equipment. Debt to equity ratio is 1.4. That means for each dollar of equity, $1.40 of debt. They don't pay a dividend. Negative free cash flow, so obviously worse than the median average. They rank 17th in market cap. Their price to book and price to sales are worse than median average. We can't look at that PE or price of free cash flow. Negative earnings, negative free cash flow. They generate the least amount of revenue on this list, or at least on the top 20. And we can't look at their 5-year annual revenue growth rate. They have not been public that long. Here's their latest income statement, the second quarter of 24. Revenue is up from 270 million to 283 million. Most of their revenue is baseball revenue, 266 million. Selling tickets and food and drinks, also merch. Mixed use development, their property, the rent they collect, 17 million. Baseball operating costs, 205 million. They have to pay the players, also maintain the field. Mixed use costs, 2.4 million. SG&A, 34 million. So total expenses, 257 million. They do have positive operating income of 25 million, up from 20 million. They spent 9.7 million of interest on their debt. They received 12 million of earnings in investments in other companies. Earnings before taxes, 30 million. So they have positive net income of 29 million. Last year, they had a net loss of 29 million. So that gives them an EPS of 47 cents. Exactly opposite last year, negative 47 cents. So to summarize, I have them trading at an 87% premium. I give them a ranking of 2 out of 10. I would not touch this stock. It does not look appealing to me. Ratio is 2 out of 10. We can't even look at that PE or price of free cash flow. Financials 3 out of 10. Revenue is up slightly, up 16% from 2022 to the trailing 12 months. That's not even beating inflation. And free cash flow is getting worse. It's negative in 2024 in the trailing 12 months. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking the link in the description below. Thanks for watching.